Gold prices extend Easter surge on U.S. Fed's dollar debasement. Gold prices extended their pre-Easter weekend surge to set new 7-year US dollar highs and fresh all-time records in euro terms in London trade Tuesday, reaching $1,727 and €1,580 per ounce respectively as world stock markets pushed higher following last week's dramatic new phase in central bank and government stimulus to offset the COVID shutdown recession. U.S. and major European government bond prices rose, edging longer-term interest rates lower, but commodities struggled, with crude oil prices falling despite the Opec cartel agreeing steep cuts to global output with Russia, Mexico and the U.S., where shale oil producers face bankruptcy and asset seizure by bank lenders. Thursday first saw the U.S. Federal Reserve launch $2.3 trillion of new lending and asset purchases to support the economy, while EU finance ministers then agreed a €540 billion package $592 billion of aid on top of their domestic national stimulus. Washington's government spending will outrun its 2020 revenues by a record $3.8 trillion, says self-declared spending watchdog, the Committee for a Responsible Federal Budget (CRFB), a staggering 18.7% of U.S. economic output, nearly quadruple the previous forecast deficit. The UK gold price in pounds per ounce meantime held above £1,370 on Tuesday, barely £20 off late February's record spike, after the government's official forecasting agency said the world's fifth largest national economy could see GDP shrink 35% by June from a year earlier, with the jobless rate surging by 2 million people. UK mortgage lenders have already agreed payment holidays of up to 3 months for 1 in 9 current home loan customers. COVID-19's deflationary effect has been a headwind for gold, says Swiss banking giant and bullion market maker UBS, but this trend should reverse in the second half of 2020 as policy responses by governments and central banks gather traction. Most notably, and led by Fed easing, UBS goes on, we now expect real U.S. interest rates to dip deeper into negative territory and perhaps even test the post-global financial crisis lows. Adjusted by inflation expectations, the real rates offered by 5- and 10-year U.S. Treasury debt show a strongly negative correlation with dollar gold prices, meaning that gold tends to rise when real bond yields fall and giving a typical R-squared of 44% and 41% respectively on a rolling 52-week basis. Adjusted by market-based break-even inflation forecasts, 10-year U.S. Treasury yields ended last week at -0.50%, down from +0.15% at the turn of the year but still above the lows of -0.80% reached in late 2012. Real 5-year yields ended last week at -0.49%, down from 0.04% at the turn of this year, markedly above the lows of -1.60% reached in mid-2012. Raising its longer-term gold price to $1,800 per ounce, the forces behind a potential debasement of the US dollar have intensified, says UBS, because for us, this is the Fed throwing everything and the kitchen sink into the economy. The two most important determinants of the gold price are real U.S. interest rates and expectations for the purchasing power of the U.S. dollar, both inverse relationships. We reiterate our negative views on both at this point. Up to $750 billion of the U.S. Fed's new QE will go to corporate borrowers through the bond market, including high-risk high-yield debt via direct Fed purchases of stock market-traded ETF trust funds such as iShares iBoxx high-yield product NYSE-ARCA, HYG. The Fed's move came after U.S. corporations raised a record sum of $110 billion in new debt, rushing to sell bonds as they desperately need cash, according to one dealmaker, and they don't want to have to go to lines of credit if they don't have to. Thursday's aid package from Brussels meantime ended weeks of wrangling between Eurogroup finance ministers and paves the way for joint coronavirus bonds. With this package we will help countries in need in the short term while also building resilient economies in the long term, said the last holdout, Dutch Finance Minister Wopke Hoekstra, after agreeing to the EU package. This is a powerful and sensible sign of European solidarity. While European markets stayed shut Monday for the long Easter weekend, New York-listed gold-backed ETF product the SPDR Gold Trust (NYSE Arca, GLD) saw heavy inflows take the quantity of bullion needed to support its value above 1,000 tons for the first time in 7 years. Gold prices in Shanghai, in contrast, today held $50 below comparable London quotes. The widest ever discount for bullion landed in China, the metal's #1 consumer nation, where reopened shopping malls remain deserted as people remain in lockdown or avoid crowds after Beijing's communist dictatorship said the first wave of the novel coronavirus has passed.